Hey guys, welcome back to Smart Wallet and Me, where financial wisdom really matters. Today we're going to be discussing the best 3 ETFs to hold for at least 10 years and see how much our portfolio would be worth at the end of 10 years. But before I do that, I would like to ask you if you could subscribe to my channel and click on that like button down over here. And please share this video with other people. If you can do that, I would greatly appreciate it. Let's get into it. An ETF is an exchange-traded fund which acts like a mutual fund but has more flexibility like a stock because you can trade it more often in the stock market with lower fees. Instead of buying individual stocks and doing a lot of research to keep up with your stock portfolio, it could become very cumbersome for some people. Instead, they would rather purchase an ETF that tracks a large number of stocks within an index. They are a very popular choice for diversification. So let's go into it and pick our 3 ETFs right now. The first ETF that we're going to be looking at is VYM, which is the Vanguard High Dividend Yield ETF. This ETF seeks to track the performance of the High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. It provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. The dividend yield is currently at 4.02% with an annual payout of $3.35 on a quarterly basis. It has a 5-year growth rate of 8.29%, so you can expect this ETF to grow 8% year over year. Now, let me preface by saying that past performance does not guarantee future returns, so keep that in mind. It has an expense ratio of 0.06%, so over 10 years, this ETF would cost you $142 compared to $2,242 with other average similar funds. It is very cheap to own this fund. It currently tracks 424 stocks and has a market cap of $130.2 billion. These stocks are the current top 10 holdings as of this recording, which is 25.1% of the total net asset. It has a risk factor of 4 out of 5 because with higher returns come higher risk. These funds may be appropriate for investors who have a long-term investment horizon of 10 years or longer. Please stick with me to the very end because I'm going to show you how these 3 ETFs will perform if you invest $10,000 in 10 years with no additional contributions and how it would perform with various contribution amounts. The second ETF that we're going to be looking at is VIG, Vanguard Dividend Appreciation ETF. It seeks to track the performance of the NASDAQ US Dividend Achievers Select Index, formerly known as the Dividend Achievers Select Index. It provides a convenient way to track the performance of stocks of companies with a record of growing their dividends year over year. The dividend yield is currently at 1.86% with an annual payout of $2.40 on a quarterly basis. It has a 5-year growth rate of 6.13%, so you can expect this ETF to grow 6% year over year. Again, it has an expense ratio of 0.06, just like VYM. So over 10 years, this ETF would cost you $142 compared to the $2,242 with other average similar funds. Here are the current 10 top holdings as of this recording, which is 35.6% of the total net assets. It has a risk factor of 4 out of 5 because with higher returns come higher risk. These funds may be appropriate for investors who have a long-term investment horizon of 10 years or longer. And the third ETF we are going to look at is VOO, Vanguard S&P 500 Growth ETF. It invests in stocks in the Standard & Poor's 500 Growth Index, composed of the growth companies in the S&P 500. It focuses on closely tracking the S&P 500 index's return, which is considered a gauge of overall U.S. growth stock returns. The dividend yield is currently at 1.86% with an annual payout of $5.73 on a quarterly basis. It has a 5-year growth rate of 9.8%, so you can expect this ETF to grow about 10% year over year. This ETF has an expense ratio of 0.03% and it would cost you $71 compared to $2,068. These stocks are the current top 10 holdings as of this recording, which is 47.39% of the total net assets. It has a risk factor of 4 out of 5 because with higher returns come higher risk. These funds may be appropriate for investors who have a long-term investment horizon of 10 years or longer. And if you're currently liking this video, please give it that thumbs up. I would greatly appreciate it, and share it with your friends. So now I'm gonna go into the actual investments and see how our portfolio would look like with these three ETFs if we were to invest $10,000. So come along with me and let's check it out. I'm gonna go into my computer and show you these calculations. Okay guys, I'm gonna show you in this portfolio visualizer what your portfolio would look like if you invest $10,000 from 2010 to 2020. Let's see what your amount would look like. So I'm going to enter in $10,000 right here, and it's inflation adjusted, and we're not going to contribute anything else, just $10,000 one time, and it rebalances annually. And we're going to enter in our portfolio name, VYM, VIG, VOO, and here we are. I'm putting in the portfolio number one asset is 100%. VIG 100% and VOO 100%. So I'm going to do the analyze portfolio, and we're doing 100% for each ETF, so we can see how much our ETF is going to be. And you can see up here it says that VOO didn't begin until October 2010, so we're doing from October 2010 to August 2020. So guys, here it is. VYM would give you $26,697 as the final balance after 10 years of your initial balance of $10,000. VIG would give you $30,292, and VOO would give you a whopping $33,798. And this is adjusted for inflation. So this is what the chart would look like over the 10-year period from 2011 through August 2010. You can see the big dip over here when the pandemic hit, and then it went right up. And then look, you can see that VOO went up really high compared to the other two ETFs. They were tracking pretty much each other right over here, but then the VOO really went high to $33,798 because it is in fact invested in a lot of technology stocks like Apple, Microsoft, and things like that. So that's why it went up. So the annual returns you can see here in 2019, you get 24.07% under VYM, 29.62% under VIG, and 31.35% under VOO. And right over here you can see that the ETF right now in 2020 is not doing good for VYM. The annual returns are negative 9.02%, but VOO is 9.57%. According to the 3-month trailing returns, it's 5.55%, 11.54%, and 15.34%. Now guys, I want to show you if we just tweak this just a little bit so that we, let's say, contribute, let's say $500 a month for 10 years. Okay, if we contribute $500 every single month, and it's inflation adjusted, so we put an initial $10,000, $500 every month, and now let's rebalance this and see. Our portfolio analyzer will calculate this for us. Over the last 10 years, your portfolio would go from $10,000 for VYM to $123,239, and VIG would go from $10,000 to $146,000, and VOO would go from $10,000 to $158,997. Guys, that is huge. I cannot emphasize how important it is to invest in an ETF and how much it is important for you to start early so that you can put in the money early on and let the compounding interest and the stock market do the work for you. You can see if you just held on to that $10,000 and did nothing with it, inflation would have eaten it up. But if you invest that money right now, look how much that portfolio would grow just by putting in $500 every single month in that portfolio. You would end up with $158,000 just in 10 years. Now, let's say if you wanted to invest $1,000 every single month. I know for some people this might not be very reasonable. For other people, it would be reasonable. It all depends on your situation and if you have the money to put in. But if you do have the money to put in $1,000 every single month, whether the stock market is up or the stock market is down, guys, this is what your portfolio would look like as the final balance. $219,000 for VYM, and $263,000 for VIG, and $284,000 under VOO. That is a huge amount, guys, that you could potentially get if you invest this. Now, let me preface by saying that past performance is not a guarantee for future returns. So I just want you to be aware of that there is a chance that things can change. But given that the stock market has been around for over 100 years and has gone through World War I, World War II, depressions, inflation, crashes and everything, it has performed very well over the years. You can also play around with this portfolio visualizer, and it will give you like all the breakdowns of your large cap value, your large cap growth, annual returns by year. You can see for inflation it was 2.96, and in 2020 we had a very low inflation period of 0.83%, and the Fed just said that we're going to try to keep the inflation at 2%. So if you keep that money in your bank account, inflation is just going to eat up that money. It would be better to at least invest that money, in my opinion, so that you can grow your portfolio and have more money later on in 10 years. Versus if you don't do anything, you're going to have less money down the road. So guys, this portfolio analyzer just shows you visually what your money can do for you if you invest it. And if you put in the money in $1,000 every month, you can see that it will grow tremendously. Guys, let me know if you want me to change this, if you want me to tweak the numbers even more. I can do that, and I can show you how much your money would grow over the long period of time. I hope you guys enjoyed this video. Please give it a thumbs up, like it, share it, and please subscribe to my channel. I have a goal of reaching 100 subscribers before the year end. Help me to meet that goal if it's possible. I would greatly appreciate it. And I'll see you guys in the next video. Thanks for watching.